At the end of the last week, we witnessed how macroeconomic data may affect the financial market. Thus, the US dollar accelerated amid the US inflation report and more hawkish rhetoric of the Fed Reserve. However, later it dropped since traders began locking in profits. Now let us find out what macroeconomic events may influence trader sentiment early next week. Again, important data will be published only from Tuesday. Traders are getting ready for the UK labour market reports. The number of unemployed people may decline, whereas the unemployment rate has already reached its pre-pandemic level, thus encouraging market participants. Notably, the UK has already lifted all containment measures, including mask wearing. That's why the UK economy may show a confident recovery process in the near future, despite the Bank of England's high interest rate. All this creates favorable conditions for a rise in the pound sterling. And this day, traders will also pay close attention to the ZEF Economic Sentiment Report for February. According to the forecast, the indicator may increase to 53.5 points from 51.7. Such a rise reflects entrepreneurs' expectations of a faster economic growth in the next 6 months. The consumer and export-oriented sectors are likely to be among the leaders. If the predictions come true, the euro-dollar pair may show a short-lived rise. Data on the US Producer Price Index may remind traders about surging inflation and the need to raise the benchmark rate as soon as possible. Economists suppose that the PPI data may signal about further acceleration in consumer inflation. Against this background, the US dollar may gain in value. Wednesday, it's a very important day of the next week. Trading is expected to be active during every session. Thus, during the Asian trade, China is going to unveil its consumer price index figures. In December, the indicator dropped its 15-month low of 1.5%. In January, analysts also foresee a slowdown. This may force traders to switch to safer assets. The UK will also publish its CPI report on Wednesday. The indicator is likely to consolidate around 5.4% on a yearly basis. It's obvious that the benchmark rate hike, which took place in December and February, has not brought great results yet. However, if the measures manage to cap inflation rise, the pound sterling may gain in value. During the US trade, Canada will disclose its consumer price index data. Inflation is expected to go on climbing, thus forcing the Bank of Canada to raise the key interest rate. Nevertheless, at this time, traders are likely to be focused on data from the United States. Consumer spending forms more than 2/3 of the US GDP. That's why the retail sales data has a significant influence on the market. In January, retail sales may recover after a decline recorded in December. This will encourage market participants, allowing the US assets to recoup some of their losses. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. And we wish you profitable trading. See you soon.